Good morning, everyone. Welcome to the week ahead video brought to you by Synergy Signals. I'm Stephen Meli, and it's been an absolutely unbelievable week in relation to Stellar. This is something that we've spoken about for ages and ages, and it's been tumultuous. It's been impossible, emotional holding this thing through such a long period of time since 2021. And we finally got the news that we've been waiting for. It's been backed institutionally now. And the markets are just trying to work out the dynamics in relation to what effect will this have on the actual underlying token. And the way they've programmed Stellar is quite interesting. Every trust line that needs to be open, every account that needs to be open will ultimately make the token scarcer. So that's massive. It's gone up 86% or 68% this week, past week, 80% highs. 66% at the minute. But what it means, folks, is that the DTCC, the Depository Trust Clearing Corporation, ultimately the back office behind Wall Street, all of the stocks, all of the funds, all of the ETFs, everything gets reconciled at this institution. And what they want to do is, the vision's quite immense. It's tokenization of assets. So Stellar allows you to buy fractional portions of these assets, and they're going to be represented digitally on the Stellar network. So what that means is the market becomes widely available, quicker settlement. You're not waiting 3 days. It's instantaneous. It may even spread to 24 hours a day, 7 days a week. There's even scope for CFD replacement theory as well. There's a lot of things going on. So, yeah, super excited about Stellar. We've got a real big start to the month candle. This is all huge accumulation. Who knows where it can go? It's definitely one to keep an eye on. It's the first crypto to have serious adoption. As you can see, Ripple has been down for the same period. So Ripple could also get that clarification because it's meant to be a multi-chain initiative. Back to what we actually do, though. We operate, you're looking at the market here, predominantly FX opportunities, trying to survive, trying to create ideas amongst the backdrop of the Iran war, Trump tweets, Ukraine, Russia. It's really tough at the moment, but what we're looking for is opportunities within the market cycle. And the market cycle is a three-wave structure, or a little bit trickier. We can identify one and then imply two and three. So that's what we're trying to do here. Identify where we sit in the cycle, align with the trend, and here we go. So last week it's been pretty quiet. It's been pretty quiet for the past month. Tough month. Not in terms of losses, just in terms of stock positions going up, coming back to break even, kicking on. Quite hard to manage, really. So you need to be able to manage these positions. But we'll just start at the top. Let's see what AUD CAD says. AUD CAD's moving away nicely. We played a similar theme in New Zealand dollar CAD, which has been a real arse for a number of years. So as we're not actually trading AUD CAD, there's nothing for us to trade here, but what we can point out is a number of harmonics have completed here. So this blue swing completed here, not great red. Let's put this from the bottom of the swing. Right at the top of the harmonic, notice candles are acting and around this sort of vibration. Then we come down on the daily. We have the market cycle, which initially was this 1, 2, 3 was the high here. But it reset itself. In hindsight, this was 1, this was 2, and now I've done 1, 2, expect one more push up, something like that, back to test the previous high up here. Even though we are there at the moment, we will probably get up there. That also sets up the ABCD. That sets up the ABCD pattern here for 103.64. That's an absolute possibility. Move on. AUDCHF, again, this one has made a change of structure around here. We've got the market cycle showing us where we sit, level 1, level 2, and this is the W. So far, we've made a change of the last lower high, but the true lower high is here, because this is one that has created a new low. This lower high hasn't created a new low. So this lower high, let's do this. I can stay there because that's the apex. So what we've got, we can see we've got a change and we have a break. This is a valid setup to go long here. It's one of those that you're going to be in drawdown in, which a lot of you are used to now. A lot of my signals are in drawdown before they play out. That's just real. That's real rather than trying to be Mr. Perfect getting in at the very bottom of things. which is quite impossible. So why was this a non-valid entry? I can see that we didn't get a true retest, and the motto is no retest, no trade. Still haven't got a proper retest. You can argue these extra spikes, it retested those, but the trade is invalid unless you get a real retest, really. We'd look for a proper retest here and then long. HF not really trading there. I'm going to skip ADNZD. ADUSD is here at the minute. This is level 1, level 2. And you can see the harmonic swings working up to here. This A, B, and this C, D. Notice the sell-off. Again, this is the targeted action for when we do sell off, this void. We've got a third leg potentially to go up here. We'll have to see. The bigger picture has changed, absolutely changed. We did have this as one of the best market cycle examples. If you have a look here, 1, 2, 3, we identified 1, we identified a big 2. But it gave us the 3 here, but I didn't see was valid at the time. But over time, we're grinding away. It's either still level 2 and we're taking out this as an inducement move and we do drop. That can definitely still happen. But until we get clear breaks of structure around here, you can't really do anything. CAD CHF, we're looking bearish again, expecting this to hold up at some point. We're certainly in the lower section of the move. Head shoulder inverse at the moment. This was okay. We took this trade as valid. We took that. It just didn't kick on. And now we came back. Not really the structure I like part. Euro AED was looking promising. Change break. Got retests, but no breaks up here. Euro CAD. Let's see if we can spot some structure. We can on this. I know we can. This is a really nice pattern. This has got a few of the methods coming together at once. We've got first of all, the ABCD. A, B equals CD brings us into the second zone here. Level 1, level 2. The obvious area for weakness is this void, but we haven't had a retest properly. But at the moment, we're setting up for higher prices. Not so easy. Well, it's not too bad to get into this one, but again, no retest of this area because there hasn't been a retest. That bothers me, and it's not part of my trading. And so I'm going to leave that. Okay, moving on. Euro GBP. Euro GBP is one of the kings of the long-term chart. This is the market cycle in its glory, basically. We are sat here. But even though we're sat here, it still doesn't mean we can't come down to here or here. That would complete the A, B equals CD pattern. Notice the lower highs. Notice the equal lows. That's just a lot of liquidity there. There's a weird little gap here. I think down before up, but could be wrong. I'm often wrong. Euro USD is one that I am stalking. I like the way it sits within the market cycle. Level 1, level 2. We sit here. We're anticipating higher. We have a Gartley, which is nice. That is a Gartley pattern, but at the same time, are we being tricked here into thinking this is level 1, this is level 2? At the moment, we're working back this structure. We're seeing 1, 2, anticipating that third, remember. So this could actually be quite a valid setup for us next week. It's not pristine. It's not a pristine one. Excuse my tiredness. Not pristine enough. It's one that there is structure to it though, you can't deny that. There's structure off an ABCD. I think you'd have a go with a stop below here. So that's definitely one for next week. But again, my hesitations are structure. 1, 2. Could be wrong. GBP AUD. Okay, GBP AUD has been a decent one from here, to be fair. And we've just chopped out. Pattern looks pretty complete on the way down. However, this was level 1, level 2 on the way up. This was a peak. Pulled away into what could start to be a big consolidation zone. Not really for me. GBP CAD. Again, structure level 1, level 2. Looking for longs. Playing around with that high, notice the lower highs, notice the change, and the change here. One more break retest, you'd be in there, but you'd have to wait down here for a safe trade. Not sure, that needs to do something drastic to get back into the bullish frame. GBP USD, this is nice, this is clear, good structure, level 1, level 2. We've made a higher high, higher low, higher low, sorry here. Let me get to the... So this one is also a bit curveball because on the way up we had this sneaky pattern 1, 2, 3, and because we never got this retest down here, it was idiotic of me. Idiotic, and I got caught in that and took a few steps back in some of my accounts. So we have retested this now. 1, but these quick moves, you normally have the 2 and the 3 in 1, so that's the only hesitation. high, low, change, break, retest. Could get interesting again, but it's not pristine. This is sort of your brain making things up a little bit, making you think it's the right thing to do. We'll see. We'll see. Not pristine. Moving on, this is one that we've had great success with. This is a beautiful pattern. Let's start from the beginning on it. NZD USD on the left-hand side. 1, 2, 3 to the low. On the right-hand side, we just had a first spike up, which was a trap into the beginning of the new year. And then we created this false move all the way throughout 2003. And then we've ranged really, and we've held this low, and you just start to notice those they're sort of rounded, and these uneven highs that don't really have order, they've been taken out here. These guys have now been pretty much swept out, and it wouldn't surprise me if we get up into here, into this sort of area. Ultimately, this could rush much higher. The ABCD is nearly complete here, but we did enter this. I'll show you where. We were in drawdown as usual. So we saw a W. We identified this pattern here, 1, 2. We saw the W. It's all a bit abstract, Picasso, you did see. But then we counted waves, waves 2. And here, you have to throw a bit of caution to the wind and get in. And we did that here, and we did that here. And it's a really good one. What's positive about it is we've got a week of rise, second week of rise. Probably could come back a little bit and then go again. We'll have to wait and see. Moving on, the dollar basket conundrum. So we had the pattern on the way up, 1, 2, M, and this gap was filled. This gap is pretty much filled, but not all the way up to here. If we get anything up there, though, that's a change of the previous lower high. We then want to see it. You will see a break of structure, retest there, and go again. That's going to be a banger. So I am wary of that one as well. To be fair, folks, that's probably enough, to be fair, what we've gone over. We're still looking at New Zealand dollar CAD. It had an absolute booming week last week, backed up economically. And we're playing around with stocks on the other side of the business. I will tell you at the minute that when you get better at using AI and you start refining some of your judgment with it, there's a lot of powerful themes out there that we're aware of. We've got robotics, quantum computing stocks. We're looking at AI continuation, and also the facilities that allow the AI data centers, the concrete, the bricks and the mortars to make these things. Really interesting valuations in the US. In relation to those, we do operate a couple of spreadsheets, can share them with people if they're interested. But any of you that are looking at this thinking, okay, that seems quite interesting, we send signals based on the market cycle, and yet there's a 14-day free trial. If you are interested, click the link below, and have a good rest of your weekend. Cheers.